What's up, YouTube? Quick video here. Update from Monday. Today is Tuesday, so it's coming out a little bit late. I made 11 trades yesterday overall, but on the small account challenge, we have 4 here, 2 closing and 2 opening. So the closing, the first one here is SPY. I closed that one for about a 85% gain. I'd held that one for 157 days here, so I was kind of tired of holding that. I put that on right at the, I guess, start of the downturn. It wasn't quite the bottom yet, so that's why the percentage gain was not as high as one from the other account. I closed yesterday for over 1,000%. So, but yeah, still a very good gain in my opinion. So. Close that position out, and I think I have one more SPY call left for next March or something like that. And then the other one, so this one was a close. I just decided, a manual close. I just decided I was done holding it, and I didn't know where the market was going to go from here. The upcoming election kind of scares me a little bit. I'm not sure how the market will handle that. A lot of times it'll just be a very momentary dip and then it'll come right back. So if that happens again, then this would have been fine. However, if it did turn out to throw a wrench in the market for a bit, then I didn't want to sacrifice an 85% gain just to, and all that time holding it, just to try to eke out some more. So the SE one was one that had closed out. I had lowered the, let's go to this little summary card. I had lowered the closing position to 50, as I had done with a bunch of my other positions that were so, in my opinion, so far gone where they're all going to be profitable. So I might as well try to get some more money out of them. I didn't see the market retracing enough to invalidate those positions. So anyway, so I lowered that one SE to 50, and that had actually closed on its own. So that one was a net of 133, and we can see the SPY was a net of 153. 2 I opened up is Amazon, and that was because Amazon had a down day yesterday, and it wasn't a huge down day, but it was down enough that I wanted to buy the dip. And then XBI is maybe the first time I've gotten into XBI on the small account challenge video series, but that is a ticker that I actually love. They have great liquidity in XBI, so every time you enter into XBI, you want to set your credit up a little bit more from mid, so that way you can get a better fill, because odds are that it will fill immediately if you don't. And this one was actually, I forgot to do that, of course, and just accepted the mid price, and it filled immediately. So I probably could have gotten a couple more bucks out of that one, but still really great premium, 165. So yeah, so now let's go over to the portfolio as a whole. Yeah, so the 3 upcoming that expire in 2.5 weeks: Microsoft, Amazon, and MasterCard. Let's refresh this. This is what Tastyworks normally looks like. If you're interested, I wrote a plugin for Chrome and a bookmarklet, which is a little JavaScript thing that sits on your bookmarks row for Firefox and stuff, to get rid of some of these extra tabs and to make it full screen. You can let me know if that's something that interests you. But anyway, yeah, so let's uncheck this, and then MasterCard and Microsoft, and the last one was Amazon, right? So you can see those are all very likely to be fully profitable. I still want to close them out early, so I have closing order for 40 there for Amazon, and then MasterCard was 50, and Microsoft's 50. Now those are just sort of randomly chosen, especially Microsoft, which was, it had been hovering right around $200, so I didn't want to try to go too far with it, but now that it's up at 216 on the TikTok jump, I probably could lower that a little bit, but I'd just rather close this out and move on with my life as well. You can see right now I'm kind of holding half of my account value, almost. Let me clarify that. Half of what I started with. So I started with 2K, and I'm holding 12 in cash at the moment. I'm not going to say I'm always going to do that, but at this point I'm mostly playing with house money. So yeah, so if all of these were to completely tank, I would be able to start over with 1200 and get back up to where I'm at. And so that's always the goal. You want to have enough in cash or in something that's less prone to disaster. So, you know, on my other account, I'm building up my stock portfolio and still leaving a margin there of cash that I can play with options with. And it is like an internal struggle for me to hold stock because they are way less profitable. So I have to shift my mindset for those to think of those as cash reserves as opposed to trying to make money off of those. But anyway, that's just a little psychological thing. So let's get into the positions that I put on. That was XBI and Amazon, right? Wow, short-term memory. Yeah. Okay. So the new Amazon position, let's select that, is obviously substantially higher than it was before on the move up. I'm already down $10 on that. As always, if you're familiar with my videos, that's nothing normal. In fact, that's pretty good to only be down $10. Right now I have a closing order set for $106 and the current value is $222. Yeah, so I opened up for $212. But we still have a pretty good buffer, and if I go into the trade tab, I can see exactly what the percentage in the money now is. Market's not quite open, so these numbers might be a little bit off. But yeah, right around 44%, which is still great. So XBI. So here's my buffer. And because this is a ETF, you'll get a lot less movement. It just so happened to make 13% yesterday. But typically you get a lot less movement in the ETFs. Let's go into the trade tab. %. Yep, and $5 wide. This is nice if you have a small account because you can choose every strike. So maybe so doing $1 wide I think is the least likely to be profitable because of the canceling out of the Greeks. But if you have a small account, sometimes it's hard to do something other than $1 wide. But because they have strikes here and it's still a high priced stock relatively speaking, because they have a strike options on every strike, you can come up here and do a $3 wide, which is better than a $1 wide, but not quite as heavy as a $5 wide. And you actually get a better ROI because of the decreasing returns here. The price gets exponentially not worth it the further out you go. So you don't want to go, you know, 100 wide anyway, even if you had the capital to do it. In my opinion, and you can watch my put vertical or my credit vertical video for more information on that. But basically, doing a 5 or 10 wide is great anyway, and so if you're doing a 3 wide, you actually get better capital allocation anyway. So you can stick with that for a while. Okay, let's go look at the chart, and then that'll be it. Yeah, So yeah, I made the 11 trades yesterday because of the pop up here. It doesn't actually look like that much, but just that little amount in the market was enough to have. So it was basically half-half. We'll say 5 closing trades and 6 opening, something like that. Yeah, so that was SPY. Let's go to XBI. So this is a biotech ETF, and we can see we did have a huge pump yesterday, but we've been hanging out in this range between 110 and 120, and that's pretty typical, a $10 range. You can see that here, the whole way back through here is all in a pretty good box. And we're just bouncing off of the 50, and we're coming up off of the MACD's turning up, RSI's turning up, so we're past dividend assignment, which incidentally didn't have a negative consequence on the stock anyway. But for the majority of this time, you can see it bounced off the 50 and then came up, and then now we're getting ready to bounce off the 50 again. And I'm not saying we'll have that same type of recovery. Typically, XBI doesn't move, any ETF doesn't move exponentially up, but hugging the 50 on the way up is what it's been doing, and we're about ready to go up again, in my opinion. Okay, so Amazon. I was looking for an entry in Apple yesterday, but there was too much good news. I'm not sure how many down days Apple will have between now and end of August when they're doing their split. I'm going to try to get a position in here as soon as I can. Hopefully they'll have a down day this week, and I'll put one on, but keep an eye out for that. So yeah, so Amazon has had 2 down days here, and they've been hugging the 20-day, and so we're right at that point, and so that was sort of the indication for me. Again, we're past earnings, which is great. MACD's turning up. RSI has not turned up yet, but typically Amazon gets bought up rather quickly. So again, I'll say I'm always bullish, at least for the foreseeable future, on Amazon. So I'll pull up Apple. So as you can see, this is why I didn't want to enter Apple. With the huge beat on earnings and then the split news, you know, I don't know. They're not going to come back down too far, obviously. They'll I think 410 would probably be the lowest, but they might even find support down here if they fill this gap a little bit to 425 area, 424. So, yeah, it's relatively safe to put on a position now, but I would like to see a down day or two to see where they can find support before I enter in something. I did put one on in the larger account just to get something on the books in case they were to continue to have a trend up, which again, I would not be entirely surprised if that were the case. Yeah, but so just to close out the video here, currently have 43 in this account. I wrote an export feature here in the history tab, so you can click export. It'll spit out a CSV file for you to open up in Excel or Google Sheets or whatever your editor of choice is, and then you can run some of your own analytics. But I'll be using that once we get to 5,000, and then again to close out the video series when I hit 10, just to give you some stats on the individual trades that I've made. So let me know if you have any questions, and I'll talk to you next time. Thanks.